Welcome back to Blockchain Basics. Today we're going to compare the current Bitcoin bear market to the dot-com crash that happened in 2000, which show some remarkable similarities to each other. We've seen pretty substantial rallies in both the stock market and the crypto market over the last few months, largely fueled by lower than expected inflation data and some more optimistic comments from the Federal Reserve. But more recent data has been indicating that this bear market rally is reaching its end. So the question we'll answer today is whether the next dip is the one to buy or if we are still in the early days of this bear market. So let's start by taking a look at where we are in the macro Bitcoin cycle. Historically, Bitcoin follows these multi-year cycles that tend to oscillate around what you could consider its fair value, which trends up logarithmically with time. The first thing to note here is that every couple of years, Bitcoin goes through a huge, unsustainable bull run and then gives up most of those gains over the next year or so. So you have a bear market year in 2011, another one in 2014, another in 2018, and finally another one in 2022. But then what happens the year after the bear market? It doesn't necessarily just shoot off into another bull market. Instead, it tends to just chop around underneath the prior all-time highs. So you see that to some extent in 2012, but even more so in 2015 and 2019. Then once it's consolidated for a while, it breaks out and goes on another massive run. So what's the most likely scenario for 2023? Well, it's probably not going to be another huge bear market year, but it's also probably not the start of a new bull market yet. We might have some big rallies, we'll certainly have some big pullbacks. And if things continue to play out like they have in the past, this year will be the year to start accumulating Bitcoin if you haven't already. But 3 data points does not make a trend. So this is where we're going to turn to the Nasdaq, which represents the 100 largest tech stocks in the US market and is probably the closest comparison we have to Bitcoin in terms of technology, volatility, and growth potential. Specifically, we're going to examine a theory put forward by Benjamin Cowen, which he has made several videos on going back to early 2022, even before it was obvious that we were in a long-term bear market. If you remember, the Super Bowl in 2022 was referred to by a lot of people as the crypto bull because of the huge number of cryptocurrency ads and the secular popularity of crypto at the time. But on his channel, Ben noted the similarities between the crypto bull and the Super Bowl in 2000, which was known as the dot-com bull because of the commercials and hype around the dot-com companies at the time, which had just experienced their own wild bull run throughout the late 90s. But that's just the beginning of the similarities. In 2000, the combined value of the top 200 plus internet stocks, as measured by the Bloomberg Internet Index, peaked at just under $3 trillion. If we go look at the total cryptocurrency market cap, on November 10th of 2021, it also peaked at almost exactly $3 trillion. But don't rush to put on your tinfoil hats just yet. Let's see what the charts actually show us. Here's the Nasdaq, with its peak in March of 2000, and the first thing we see that happens is a 39% fall that dips below this 50-week moving average here. And this is the first real indication of weakness in the market. We then see an ABC retracement with the second peak here that just barely gets above the first peak before rolling over on itself. This is the second major sign of weakness in the market, and what comes next is just a massive crash. We break below the 50-week moving average and fall 1, 2, 3, 4, 5, down 67%. Okay, so the question is then, did Bitcoin do something similar? Here's the top of Bitcoin at $69,000. In the Nasdaq, we had a 39% initial fall. Bitcoin, also a 39% fall. Then what happens? An ABC retracement, where the C leg gets up just barely above the A leg and then gets rejected. Now, if the similarities were to continue, we would break below the 50-week moving average here and see a massive 67% crash. And sure enough, Bitcoin breaks below the 50-week, crashes 1, 2, 3, 4, 5, and how far down does it take us? Just about 67%. All right, so then what happens next? Back on the Nasdaq, we have a bit of a relief rally that comes in, but it doesn't last that long and starts to come back down to test these lows. But this point circled in yellow here is critical. Right as the Nasdaq is coming down to retest the lows here, where investors would like to see a nice double bottom formation coming in to spark a new bull market, something happens in September of 2001. Instead of holding this level, we get a black swan event, the 9/11 attacks, and the bottom drops out again. Now the Nasdaq is down a total of 77%. Looking at Bitcoin, here is the same inflection point. We had a bit of a relief rally, it fizzled out, came back down to test these lows. Right as it's testing the lows in here, again, we get a black swan event. This time, FTX collapses and the floor drops out on the market, sending Bitcoin down to $16,000 for a total fall of, you guessed it, 77%. Now, is it fair to compare Sam Bankman-Fried and FTX to Osama bin Laden and Al-Qaeda? I will leave that for you to decide. But what I can say is that pretty much every person in the country knew about this when it was happening, and it caused a lot of fear and uncertainty. I was getting texts from people who didn't know the first thing about crypto, but had heard about the FTX collapse. So in both cases, we have this major black swan event that pushes prices lower again. In reality, not that much lower. However, it was low enough that when this next 60% rally came in, the Nasdaq wasn't able to put in a new high. And critically, it wasn't able to get above its 50-week moving average. And we should note here that if the bottom had held back in September of 2001, that 60% rally would have gotten the Nasdaq above its 50-week, and it would have put in a new local high. All of that, holding the low, breaking through the 50-week, setting a new local high, would have been extremely bullish. But instead, we have a lower low, a lower high, and so the bear market continued, dropping another 54% before it finally bottomed with a total loss of 83%. Now let's take one more look at Bitcoin. Bitcoin sets a new low around $16,000 and then proceeds to rally 60%, exactly the same as the Nasdaq. Again, if the 60% rally had occurred from these levels, it would have pushed Bitcoin above its 50-week and set a new local high. But because of the black swan event, we remain stuck under the 50-week today and under the local high set back in August. Of course, Bitcoin could keep climbing from here, and if it did, that would be extremely bullish, at least on short time frames. But if it gets rejected here and continues to follow the trend we saw in the Nasdaq, does that mean that Bitcoin has another 54% to fall from here? Possibly, yes. And interestingly enough, a 54% drop from these levels would put Bitcoin right around $10,000, a level we've been talking about since Bitcoin was above $60,000 back in November of 2021. That too would represent an 83% fall over the course of the entire bear market, which is not only in line with what Bitcoin has done in past cycles, but is also exactly how far the Nasdaq fell after the dot-com bubble popped. But what would cause this to happen? In the early 2000s, when the Nasdaq lost that last 54%, the US was experiencing an earnings recession. GDP growth was historically low, and unemployment was high, above 5.5% for all of 2002. As we've talked about before, there's some evidence that the US is headed into a recession. The yield curve inverted almost a year ago, which is usually an indicator of a recession in the next 18 months. That would put a likely recession sometime in mid-2023. Moreover, the effects of the Federal Reserve's interest rate hikes last year are expected to take about a year to take full effect, again suggesting some serious pain sometime in mid-2023. So, should you wait until a recession is declared to buy stocks in crypto? Probably not. Most often, recessions are not declared until several months after they actually occur, meaning by the time a recession is declared, the new bull run could already be underway. There's also a chance that we do not actually see a recession, or if we do, that it may be relatively mild and may already be largely priced into the current market prices. You should also consider the possibility that Bitcoin may not even make new lows, even if the stock market does. In the 2014-2015 bear market for Bitcoin, as stocks put in new lows, Bitcoin held above its previous low from a few months earlier. Likewise, during the 2020 recession, stocks put in lower lows, but Bitcoin held above its low from a year prior. So while we certainly could see new lows, and it would go along with my long-running thesis of a $10,000 Bitcoin, waiting for these new lows to buy could mean that you miss out completely on the next bull run. And if history is any indicator of what is to come after the recession, the next bull run could represent a huge opportunity. After the dot-com crash, the Nasdaq went on to climb 2,000%, reaching out to its 4.236 Fibonacci extension level, an important psychological resistance level, which Bitcoin has also done in every single one of its previous cycles. And if it did it again from around 10K, that too would be a 2,000% rise, getting Bitcoin to above $200,000. So there is downside risk and upside risk to consider. You don't want to buy too much too early and lose out on the opportunity to buy at lower prices. But you also don't want Bitcoin to take off to 200K while you're still sitting on the sideline. Instead, I tend to hedge both of those risks by investing progressively as prices decline. Of course, none of this is financial advice. I'm not a financial advisor, and these are just my own observations. So always do your own research before investing. But if you liked this video, please subscribe and hit the like button, and I'll see you in the next one. Thanks for watching.